Well, hi there and welcome to the ISC FX Options Weekly Outlook for August 22nd, 2011. As always, this is Jason Ayers of OptionsSource.net. Let's take a quick look at a weekly chart of the U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. Well, the dollar index dipped below the 74 level briefly last week, but managed to close above, lending further credibility to the significance that the 74 level is playing for support. Now, the 76-77 focal zone remains a key overhead resistance level to any upside continuation. Failure to hold 74 is likely to yield a continuation lower. Let's take a look at the daily snapshot. The daily chart reflects the importance that the 74 level is playing as support in the near-term picture. Next up, the CDD, the U.S. versus the Canadian dollar. Well, the CDD continued to consolidate within the 98-99 focal zone. A break above 99 should yield a continuation to the upside. However, a break below 98 is likely to retrace and test the 96-97 level as support. Let's take a look at the YUK, the U.S. dollar versus the Japanese yen. Well, the YUK has remained within the 76-77 focal zone for the last 2 weeks. A break below 76 should signal further weakness in the YUK. A break above 77 is likely to retest the 79 level for resistance. Next up, the U.S. dollar versus the euro is seen here in the ISC FX Options pair value EUI. Well, the EUI remains indecisive, continuing to trade within our sideways triangle here. Now, the pair tested 69 for support last week and bounced. However, a break below 69 opens the window for a continuation lower. The 70-71 focal zone remains a key overhead resistance. Let's take a look at the BPX, the U.S. versus the British pound. Well, the BPX is flirting with an important support level at the 60.5, 61 focal zone. A break of this level is likely to yield a tradable move to the downside. A break above 61 should retest the 61.5, 62 level as resistance. Let's take a look at the U.S. dollar versus the Australian dollar as seen here in the ISC FX Options pair value AUX. Well, the AUX retraced down to the 95-96 zone as anticipated. Failure to hold 95 as support is likely to yield a move down towards the 92 level. The 97-98 level remains a key overhead resistance to any continuation to the upside. Let's take a look at a few of our key points. First of all, the U.S. dollar index remains indecisive, trading between 74 and 75 last week. A break below 74 suggests a continuation lower. A break above 75 should yield a move to the upside. The CDD continues to hold above the 98-99 focal zone. Support sits at 97. A break above 99 opens the window for a continuation higher. However, we are still cautious of a retracement lower after such a significant move over the last 2 weeks. The YUK continued to consolidate along the lows. A break back above 77 should signal a tradable opportunity to the upside. EUI remains indecisive but tested 69 for support this week. The 69 level appears to be holding as an important support level. We could see a test of 71, however, this level remains an important resistance. The BPX tested 60.5 as support. A break below this level should yield a tradable move to the downside. A break back above 61 should test the 62 resistance. The AUX retraced to test support at 95-96 and bounced. A continuation higher is likely to meet resistance at 98. And this has been your ISC FX Options Weekly Outlook for August 22nd, 2011. As always, this is Jason Ayers of OptionsSource.net reminding you to sign up for your free webinar at www.optionssource.net. Thanks for joining me here this week. We'll see you here next week.